Constructing your life is about much more than just building a bank account. Each week, join real estate entrepreneur and mindset coach Austin Linney as he interviews guests who are constructing their dream lives and impacting the world around them on a daily basis. If you're an entrepreneur or wanting to start a business, or you just want to hear motivating stories of how others have overcome the odds, you are in the right place. And now for your host, Austin Linney.
Guys, welcome to Construct Your Life. This is Austin Linney. I've got a guest here, special guest today, Mr. Terry Judge, who I call the best looking man in real estate, bar none. We still don't know how he got his girlfriend, even though he is an attractive man, but we don't ask those kind of questions. So how you doing today, bud?
I think I'm going to love this show.
That's
man,
right.
It's so good to be here. Finally, we connect.
Finally, man, this is a busy man. So, because I barely know what you do, so because I'm still learning it. Why don't you tell the audience kind of your niche in the real estate? You do a couple different things, but talk about your main niche in the real estate space.
Yeah. Well, okay. First of all, my name is Terry Judge. I mean, did you even say that? Did we just jump right into the action?
I did.
It's all good. Yeah. So, gosh, I, serial entrepreneur. I was, so I started it's called cost segregation, but my firm now is really, we're a full blown commercial real estate specialty tax company. We're not a CPA firm. A lot of people think we are, but we work with, now thousands of CPAs around the country, that bring us in to work with their multifamily clients and also other commercial real estate investors. So we work with property investors and accounting firms are really our two main verticals. And we work with, the mom and pop, the person that just bought their first building, first multifamily. So all across the board, from $500,000 in acquisition all the way up to, hundreds of millions of dollars, to just kind of put that in perspective. So people always ask me, and you're asking, what is exactly do you do? My brother and my family still don't know what the heck I do for a living. And my friends just laugh at me. They're like, yeah, ask Terry what he does again. Everyone just chuckles. Essentially it's cash. I'm the guy in the dump truck driving around dropping $100 bills in people's front lawns. But, we leverage the government. It's federal. These are federal programs, and the IRS, allows depreciation. That's a big word. Real estate investors love depreciation. They get involved in investing for depreciation. I mean, that's really one of the biggest highlights to mitigate your taxes. But what I do is I take depreciation, Austin, to a whole nother level. And when someone buys a building, we break it down to the electrical outlet, and we kind of segregate out every nickel that goes into a building's purchase price, and we're able to essentially write off a huge portion of that building's purchase price in like year 1 to year 5. The normal accounting method, what's called straight line in the United States, would be, let's say you and I bought a multifamily building for $1 million. That building in the normal, world would depreciate over 27 and a half years. In an office building or let's say a storage facility would depreciate over 39 years. Well, why would you let the IRS depreciate an asset over 39 years? You might be dead by then. I mean, you would be dead by then for the most part. And instead, there's another pathway in the tax code that we can write off a building over 1 year to 5 years. So we can front load all that depreciation. And you can use that depreciation to offset your taxable income, therefore bringing your taxable income in a lot of times down to zero and for years to come. So it becomes like, I like to call this the open checkbook against Uncle Sam. So, it's just a fast way to write off your asset. And it is the most, you hear about 1031 exchanges and that's another strategy. But in my humble opinion, cost segregation is the most powerful tax strategy on the planet. And it's usually one of the most misunderstood and misutilized tax strategy that exists. It's kind of like, it's very strange to me.
I'm gonna make a statement here because I already know what everybody's thinking, because I thought this. They want the sexy. Ooh, look at those countertops. Those are really good tile. Ooh, that's great, sexy. But what you don't understand, guys, is what this man is talking about is government legislated ways. It's not about how much money you make. It's about what you bring home. And it wasn't until I worked in private equity, until I met you as well, that these are the true ways that multifamily office owners get wealthy, is these strategies that you're going to talk about here in the first part of this interview. And then we're going to talk about entrepreneurship and life. So like I said, I don't care if you want to listen or not. I'm excited. Let's go deeper in, because I believe that 1031s have limitations that put stipulations on how you can maneuver real estate. So let's talk about how you can use these strategies to really scale up.
Yeah, it's all, I mean, so, right out of the gate, we take a look at, people always ask me, what are the sweet spots? So it's the gift that keeps on giving, because about every year and a half, the IRS, for some reason, just keeps enhancing cost segregation. So now, with some of the newer tax laws, bonus depreciation now is in effect, which basically means you can just take 100% of first year, what we call bonus depreciation. So essentially, we're writing off a big portion of the purchase price in year one. So think about if you're syndicating and you have investors that you're bringing into the mix, they can get a lot of their investments literally back in the form of depreciation. It would show up on their K1s because you're taking so much depreciation in the first year. So investors love bonus depreciation, because you're just getting such a big piece of that write-off in the initial as that building goes into service. So again, it just creates a lot more depreciation in the early life. So I'll get off that. So what qualifies? So any building with a $500,000 or more in acquisition costs, or let's even say new construction costs, qualifies. Any asset class qualifies. The only time that you would not want to do a cost segregation study is if you're going to flip the building or you're going to dispose of it under 3 years. So maybe jot that down as a kind of a rule of thumb. If you're going to flip the building, you're not going to hold it for at least 3 to 5 years. We don't recommend cost segregation, because there's something called recapture. That's for a whole nother podcast. I don't want to get too deep into the weeds, but the IRS is going to want some of that money back. And you really just haven't let the time value of money kick in, per se. So anything beyond that, if it's a longer term hold and the building is profitable, right? So you're going to buy that building for profit. You're not buying the building for a loss. You're buying that building so that thing's going to kick off cash. And we're going to use cost segregation as a tool to use. So we're going to front load all that depreciation in the building. You're going to be able to use that basically on your tax returns to offset the income. And if somebody's at a 39% or 35% tax rate as it flows through to their personal self, that's a high tax bracket. You're a high net worth individual. I mean, you're talking we're adding another 35 to 40% in terms of kind of the spread. Or we're improving that the cash on cash. That's huge. So that's just and we do a no cost benefit analysis. So if someone says, hey, I got a property, do I qualify? We're happy to do a free analysis. We don't charge. We do a lot of pro bono work just to help people out, just to kind of get them straight. So, okay, do I do it or not do it? Do I just do the normal straight line method, or do I take this depreciation, and how would that work in my world? Okay, and we can kind of give some guidance on when to do it and when not to do it.
And something that struck me when you're talking about this, and I learned about it the first time, I think in life, people, what I hear a lot, right, is that they just don't know, right? And what we're looking to get across with this podcast, with Terry's knowledge on this, and he's going to do a podcast and everything, is we're looking to give you every option available. And it wasn't until I talked to a financial advisor and I heard about this whole life insurance policy where you can use as a non-taxable asset to, we'll bring Ryan on later on, my financial advisor, to explain all this. But what we're trying to get across to you guys is there's more than one way to skin a cat. And this is an amazing vehicle to enhance and push the envelope forward over and over again. And what you're only doing by turning your ears off to things like this is you're just putting roadblocks up into your mind. And every day that you step in this world, there are things to be learned. There's people to meet. There's new strategies, and we're only going to keep, presenting those to everybody. And that's what I think is so fun to me, to learn these things. And you're taking in these assets and you're realizing that really, and thank God I have a business partner that cares about this, but that the tax code and insurance, right? I read something the other day, maybe you can speak on this. I heard a multifamily guy say that he thinks that the single thing that will crush the multifamily segment is the cost of rising insurance. And who looks at insurance? But all these things matter.
But you gotta have it.
Yeah. And all these things matter when you're talking 50, 100, 500 units. Same way with what you do. And so when you get a client in, right, and you get these guys and you turn them onto this, I'm sure a light bulb goes off in their head like, oh my goodness, I didn't even know this. And then they're handed this amazing vehicle that really, I would imagine, reshapes their business.
I mean, you nailed it right on. I mean, you nailed it. There's these, first of all, you've got, you're up against price increases, like you said, like insurance. What about property tax uncapping? That is killing lots of deals. If you bought an asset that maybe somebody else held for 15, 20 years, and all of a sudden you go buy it, and then that property tax gets uncapped, and therefore that property tax now, goes way up. That eats up all the profit that you didn't account for. That I see that all the time. It just kills deals. So that's just another area that people got to be paying attention to. We do property tax appeals, in-house as a value add as well. So we're very familiar, and we see it all the time. We see it, it's crushing sometimes. So just being in the know and having a team, I think it's not so much, Austin, you being all of a sudden, you're a cost seg expert, whoa, but knowing the tool and putting your team in place, because I see even cost segregation, it's missed. It's still missed probably, I'd say 70%, 75% of the time. It's an afterthought. It's not, it should, I always tell kind of what I'm shouting from the rooftops when I'm on podcasts or I'm just talking to clients and CPAs, make sure you bring cost segregation into the early stages of the analysis of the property. Start talking about it as you're starting to evaluate. Now, the good thing is I am seeing syndicators, seasoned multifamily investors. They are now adding in the cost seg and the bonus depreciation in their perspectives when they're sending it out to clients. So I'm actually looking for deals, and I'm starting to sell. So when I'm kind of redoing my own, due diligence on properties, I'm starting to see that more. And if it's not in there, I bring it up immediately. They're like, "Oh my God, I forgot." It's a great point. We got to add that in there because it's going to impact the investors coming into the deal. So, the IRS does a terrible job at promoting cost segregation. I mean, it was in the code, it was out of the code, it's been enhanced. It's very cumbersome. 70,000 pages in the tax code. How do you keep up? So again, just kind of reiterating, putting your team together, and whether it's from your insurance guy, your property tax guy, your cost seg guy, bringing those into the deals is very, very, very powerful.
Yeah, and I'm gonna give every new investor that's getting started, I'm gonna give you a secret. I'll give you a little secret.
Little tidbit.
People don't understand that sexy doesn't always win. And 90% of the guys that I know that do big deals or get a big multifamily, they own a property management company. They own a mortgage company or a title company or a cost segregation company. Guys, these are businesses that these mom and pops have to use. So you have the inside track. As a private equity, when I worked in private equity, you know where we got a large portion of our business? From lawyers. Guys, it's not everything that you think. Everything is an option if you're available to it and you're walking into each day saying that you're going to learn something, and you're going to put your ego aside, and you're going to understand that it doesn't matter how you get there as long as you get there, right? And I guess what I would be interested to hear from you, because I don't know much about this. I don't know what businesses you had before this, but I'd be interested. So we're going to play a game here. This is what I've been playing all day. Do you mind telling me how old you are, Mr. Judge?
52.
52. All right.
What?
If you could meet, if he
You see
was
the white hair?
if he was, you look so good, I couldn't tell. If you were talking to your 27-year-old self, and he was starting a business, what would you tell him?
Oh my God, that is a great question. I would tell my 27-year-old self, first of all, I'd say surround yourself with people that you want to get to or emulate. And then I would say, call them up, don't be shy, and ask them if you could take them, buy them lunch or a cup of coffee. Because now that I'm older and I like to mentor some of the people that are kind of coming up that are 23, 24, 25 years old or even younger, that would be, I'm kind of trying to mentor them. And I love when someone asks me, hey, can I take you out for a cup of coffee? I just want to pick your brain. I give so much information away for free because I just love it. You get to that point where all the struggles, all the hurdles, all the mistakes, God, if I could just avoid, and it's just mindset, so surrounding yourself, I think, with a couple different people, not your peers, but other people that are maybe older, and pick their brain, get with them, find out what they did. And that to get inspired by somebody like that, I think you can really collapse the time frame on going after a business, because I was an entrepreneur, then I went back into corporate, then I became an entrepreneur, and really did one stint for about 8 years that I feel like it was kind of I don't want. I mean, I look back, you always take a few things that you learn from that, and I think the downsides in your life are what are the character building. So without those, you couldn't reflect. But man, did I waste I burned probably 10 or 12 years in one segment of my life. That's, like I had to rewind. Oh man, like if this be 27 again, woo! For what I know now, come on, baby.
So what I tell these kids, right, that I meet, right, and this is what messes them up, this is my favorite thing to do. This is when I need to bring the hammer. I said, I've got about $350K worth of equity in my properties. I'll give it to you, free and clear, and let me be 20 again and know what I know now. I'd be retired in 3 years, please. Like, you don't get it, guys. The only asset available on this planet is time. And everybody that you meet, they're searching for it, hunting for it. And you don't need 30 million properties. You don't need 10 Airbnbs. You need what you need in life. And when you break it down, It's super simple. But we do things for other people. We get goals for other people. So my question to you is as simple as this. What kept you for that 8, 12 years that you wish you had back? What was holding you back from getting out of that? Was it comfort zone? Was it limiting beliefs?
I've always been, it's a good question too. What held me back? Yeah, I got sucked into a cushy job. They were paying me a shit ton of money to be this director of sales. I came in kind of as a consultant, built out the sales organization, and then they brought me in-house, and that was death. I sold out. And it really stunted, because I thought I was going to be one of the guys when the company got purchased. I thought I was going to be they were going to take care of me on if they merged or got bought. And that was just, they used that just to hold me down. And I burnt a lot of time with that. I didn't have the balls to start my own at that time.
Mm-hmm.
And because I just had my son, and I was going, just all that stuff, that family stuff, mortgage. They were paying me just enough to kind of keep me excited, but not enough to really start my own thing. And finally, I did cut all ties with that company and went off on my own, and that's when I started Core. Not even knowing about cost segregation. Cost segregation actually found me, which is because I'm not a tax guy. When people say, "What?" That's my little secret for today.
Mm-hmm.
I learned this from the ground up. I was more on the engineering side, so very interesting. But I think the other thing too, Austin, I want to mention is that there's in this country, and I was one of them. I didn't take the time to get my money right. I always thought I was going to make more money, and I wasn't saving my money because nowadays I really realize it's not what you make, because that's just all relative to your lifestyle. Keeping the money and then 10xing your money and doing investments smart and just learning that part. And I am seeing millennials now. Even my 18-year-old son is buying stocks. That's one thing that I spend more time with him on, and he's learning it even outside, even on. So it's awesome that I think these kids are starting to learn about that stuff. My dad was, very blue collar, never made a lot of money. And when he passed away, my brother and I, there was nothing left for us. It was he just traded time for money and didn't teach us any of that stuff. I don't use that as an excuse, but that was one thing that I didn't have my money right for a long time.
No, and I'm going to get on my soapbox here. I'm going to get on my soapbox here because I'm sick of it. If you do shit and you project your life for other people, you will never be happy. And what people don't understand is, this is a true story. This is the game I play with my clients. If I gave you if you made $50,000 a year for the rest of your life and you never had to work, but then I offered you 120 and you had to work 3 days a week, which one would you take? 90% of the time, they're going to take the 120 so they can tell people they make 120. Right. So they can tell people they make 120. But what they don't understand is the government's going to take about $25,000 of that. So you only really make $95,000. So why don't you take the $50,000 and work on a passion on the side and then grow that business? We live our life off of spreadsheets and goals and numbers. You will never be happy. It doesn't exist. And you watch these people, what's his name? Steve Harvey talks about it all the time. When you see people soaring past you, it's because they're living their life off of what they want to do, and whatever happens externally does not exist to them. Meaning, COVID can hit, Donald Trump's the president, whatever. It doesn't matter. My mentors don't care. They turn off the news, they spend time with the family they love, and by doing that, you're making a choice that what matters to you is yourself. It doesn't matter what Frank drives down the street. Fuck Frank, okay? Maybe Frank is leveraged to the hills and it doesn't matter, right? You know what I'm saying? That's what people don't get.
That's what the social media does. It warps people's brains. You get so caught up in other people's fancy pictures, and all of it's bullshit. Well, not all of it. There's some people that are really kicking ass out there, and they're doing it in a good way. But yeah, a lot of people, man, are just living a fake news, I guess you would call it. So I agree, man. You got to be happy and find your purpose, and definitely takes a little bit of time to get to that point.
And when you finally left that job and you started the company, I would imagine that it wasn't easy. I would imagine there was a lot of learning curves. So, talk us through those days when you're not probably at your best. What are you telling yourself to keep pushing forward? Somebody that maybe their back is against the wall right now and they're thinking about, and listen, entrepreneurship is not for everybody. You have to be self-aware. But what are you telling yourself in those moments of when your back's up against the wall?
God, the biggest thing too is just, I think everything is mental, everything is mindset. I think it's how you prepare before you go to bed. I mean, I know this is old cliche, you hear this all the time, but it really is true, man. When I set my goals for before I go to bed, and I write down what I got to do, and then I wake up in the morning. I do my gratitude. I listen to at least something motivational, something spiritual, just for 5 minutes. I mean, it just gets me rolling again. And then before I get going, I love to I make my first cup of coffee, and I start to review kind of what are my top 10 or 20 things, depends on how busy I am that week, that I got to do. And then now I have I rearranged my schedule. I told my assistants, I said, listen, I want you to stack my calendar from Monday, Tuesday, and Wednesday. And I know those 3 days I don't do anything except bust ass, do my podcast, do my calls, sell business. I mean, do all my stuff. And I'm so in the zone. And then Thursday, Friday, nothing's on my calendar. I take clients golfing. I go golf. I hang out with my girl. I go boating. I'm just planning. I'm strategizing. It takes me. You know what I found? And people tease me because, you're doing a 3-day work week. Yeah, but I get more done than most people because it's all focus. And when I'm in the zone, I just crush it. But when I'm scattered and I'm spreading it out, and I get, what sucks? And I'm like, enough's enough of this. Where I would have like 2 calls on a Thursday. I'm like, you got to be kidding me. I am now blocked because I don't want to cancel that 1 o'clock appointment, because once I commit to something, I'm locked and loaded. But that just jacks up so much of other things, and it gets outside of the focus, bucket, so to speak. But I've been doing that actually at the beginning of this year. Well, COVID hit and that changed up everything. But maybe even through COVID, when we came out, we started really cranking again. We were having our best year ever before March. I just said, man, enough's enough. Let's just get this 3-day work week going, see how it goes, see if it's effective, and then I can really do my external stuff Thursday, Friday. If I take a client out, lunch, coffee, face to face, belly to belly. Now we're getting back out. Michigan's finally opening up a little bit, so we can do that. So it's kind of crazy time we live. We can talk about that too in a second. But so that's I know I'm off track a little bit, but just wanted to kind of share.
You're not gonna believe this. That's where I was gonna go. Swear to God. Look, I got a client, right? True story. God love AAA Adams. Thank you so much, sir. We had a call with him. We had a call with him, and he looked at my schedule and he said, Austin, sorry. I don't think so, but he goes, I got a podcast on Monday, Tuesday, Friday. He's like, dude, your shit's a nightmare. So he said, look, you only do coaching on Tuesday. You only do podcasts on Wednesday. That's it, bro. And I'm doing 7 podcasts today, but I'm so locked in, it doesn't matter. And it's going to get done. Boom, knock it out. And what people don't understand is in life, right? The new company, which I could announce in a couple weeks, you have to hold everybody. But the guy that I'm working with, he wants us to work from 9 to 3 every day and be off on Fridays. And if you can't get your shit done, then it's done. And your thing that you just said, in America especially, we think by doing, we're moving forward. By creating the space to hang out with clients or be creative, you're actually creating a better version of yourself, right? I have a coaching client. He was making 600 cold calls a day, which is not a bad thing. But I read an NLP sales book that said you get 80% of your business from 5 clients. I said, write down 20 names that you know, right? And I said, focus on who they know and only talk to them. He's closed 5 deals in 3 weeks.
No, that's so spot on, man. And again, Thursday and Fridays, I've owned Core for 14 and a half years. So, I mean, we have thousands of clients. It's not to brag. It's just that we've been doing this for a long, long time. And one of the things, even prior to this year, before I changed my work week, I was like, God, we do a crappy job at just recycling and getting back to our clients and then, talking to them about other services. And those are our best. It's our best lead source. And we're always everybody's always worrying about the next project coming in or the next deal. I don't know what that's all about. So now part of my Thursday, Friday is what that is about. We're reaching out to our client base, and I'm just basically saying, hey, let's, I haven't talked in a year. You want to grab, you want to go golf, or you want to grab me with me for a cup of coffee. I just want to catch up, see what's going on in your business. What's happening. You be buying any more buildings, and that has been, it's a lifestyle. It's kind of part of who I am too, because I'm social. I want to get out. I don't want to just sit there and pound the phone and sit on my laptop where my back hurts. And I'm like, I got to get out. I'm going crazy. So yeah, it's been very fruitful. And I would tell people to really build that into their work schedule. People that they already know, trust, like, do business with. Maybe you lost touch with them. Just reach out to them, man. You'll be surprised. People will be like, oh my God, yeah, I'd love to connect. I haven't talked in a while. Let's connect. So. Yeah,
somebody made
things, man, mean so much.
Somebody made a comment to me the other day. They said, "Dude, my network." They said, "I don't understand. Not only do you have a massive network, you also keep up with everybody." And what that is, guys, it is intentional to spend 30 minutes or
you're on it, man. I'm impressed.
And an hour to check up. And the thing is like, guys, how we succeed in life moving forward with transparency of social media is the service that we provide. And how, look, they did a report in our private equity fund. We did like 11 million a month, whatever, when they were doing it, the whole company. They found out that 76% of the deals were referrals. When they're referrals, guys, they're already ready to close the deal. So by giving, so one of the things we do in my company is we have a spreadsheet that I enter data into when I meet people. And by the way, I'm terrible at it. I need to get better. I need to spend an hour doing that. But the last line, right? I learned this. Basically, I'm just good at it. So I can teach people if they want to know. On the last line, we write okay, I'll just use you as an example. Here we go. Real life scenario. Guess what, guys?
Bring it.
I've seen Terry Judge's Facebook and his Instagram. This man likes to get on a boat, and he loves a damn good cigar, right? And he doesn't need to tell me that, guys. So if me and Terry did a deal together, I would wait about a month and a half, maybe 5 weeks before he forgot about the whole thing, and I would send him a box of cigars, right? And Terry's like, holy shit, look at that guy. That was super, and then when I go see Terry in town, I might rent a boat, and we might, instead of sitting at a restaurant, we might do a boat day. This is how you set the table for who you are as a person, right, guys? True story. Me and Terry have only met once for an hour in Michigan, and that was only because I was the only ridiculous Texan to fly up for just a Michigan meetup, right? And so, guys, your excuses that you're leaving on the table are for you. They're not for me, because I'm going to do what it takes to get to where I need to go. Simple as that.
You had me a hello, by the way.
I know. Well, I'm very charismatic. What can I say?
There you go.
But I love it, my man, dude. We could go on for hours. If they want to get,
man, that's so good.
I know, and I'm gonna release this in all the multifamily groups because that's kind of our audience too. So I'll drop that there too. But if they wanted to know more about cost segregation, I know you have some pamphlets, or how do they get a hold of you? How would they get a hold of you?
I mean, I'll tell you, I'll give you my email and my number. So then people can is that okay?
Sure, of course.
T Judge, just like here comes a judge, T Judge at Core Advisors, with an S at the end of advisors.net. Okay, tjudge at coreadvisors.net. And then if you guys want to just reach out to me, feel free. 248-210-4843, 248-210-4843. You can catch up to me on Facebook, Instagram, YouTube, LinkedIn, all of them. Feel free to reach out. Love to chat, meet you, see what you're up to. I'm also looking to buy, obviously just like everybody else. So put me on your list. And Austin, I got to come visit you, man.
Dude, you do, brother.
Right now, our weather.
Well, let's wait till September. It's 120 here right now. But But do you play golf?
Maybe January, and I'll be up.
You play golf?
Yeah, Thursday, and Friday.
All right. Well, hey, you know Scottsdale.
As much as I can right now.
You know Scottsdale. We'll go have a nice cigar and go play golf. So.
Well, I love the golf. I love cigars. So again, I'm already closed. You closed me. We just got to figure out.
Let me tell you something. My closing rate's 100%, baby. So
I see why.
But what I want to tell everybody, guys, and I'm going to give you one more tip, and then we're going to get out of here, guys. Think about all the clients that he helps do multifamily cost segregation, commercial buildings. This is the man to know. It's not the guy that's got his shit out there on Instagram, guys. That's what I'm trying to explain to everybody. The lawyer, the title company rep. These are the guys that see the insides of deals and see the guys actually doing deals. Because there's a lot of people talking about it, and there's people that actually know what's going on. So these are the guys that you want to take to lunch. These are the guys that can get you foot in the door with other people. And it's as simple as asking, hey, is there anybody that you think would be beneficial for me to learn from? Done. That's it. It's so simple, guys. And we make it so complicated. It's super simple. But you have to read between the lines. It's not always going to show you in your face. You know what I'm saying?
Yeah, man. Boy, these have been good. A lot of life lessons. I love it, man. I love it. Thank you for having me. And we are launching our podcast. Gosh, we're putting it together. It's a lot of work, and I give you a lot of credit. I'm going to be picking your brain because you're doing a great job on your show. It's going to be called Getting to the Core. And with no BS, we're going to be talking about this stuff, investing, business, growth, life balance, something I'm just passionate about. And, I'm looking forward to getting you on the show, man, because this is what we're just going to continue. It'll be part 2.
I can't wait. They ain't ready for my story, baby. They ain't ready for my story. I'll set the world on fire.
We're going to do we'll do a 4-part series on Austin Linney.
That 4-part series.
Documentary.
Yeah, I like that. Documentary. That's what I need. My buddy texted me yesterday. He goes, dude, you need a film crew following you. Your life's like a movie. I said, that's just because you haven't seen all the accidents. That's all. So, but dude, I appreciate you so much, guys. If you like this podcast, please share it with your friends. And just thank y'all so much for everybody listening.
Thanks, guys.
Thank you for listening to Construct Your Life with Austin Linney. If you enjoyed this episode, be sure to rate, review, subscribe, and pay it forward by sharing with a friend. Most importantly, take this opportunity to start constructing your life by taking immediate action on what you learned. For show notes, resources, and more information on one-on-one coaching with Austin, visit constructyourlifepodcast.com.